Now, Nigeria's equities market is extending its winning streak as profit-taking is set to dominate, especially in recently overbought counters. Meanwhile, analysts expect investors to also rebalance ahead of first half-year earnings releases, which could also introduce more sector rotation and profit locks. Patrick Ejumedia, head of research at Sterling Asset Management and Trustees, joins me now for more market movements. Thank you so much for joining us on the show today, Patrick. It's good to connect again. Been quite a minute, but let's start off really now with the highlights of the first half of this year. We're seeing the consumer goods sector emerging top performer, about 50.2% surge when we're looking at first half performance. Your take around the developments that shaped these drivers, and then follow up with the banking sector, which also had its own wins here and there.
Oh, okay. So, well, for me, I don't think the consumer goods being at the top year to date is surprising. Because if you see what happened towards the end of last year, because of the exchange rate issues that we had, most of them suffered that a lot. So in Q1, I think that in their planning for the 2025, most of them has foreseen that the exchange rate is going to be stable. And a lot of people have said that before we enter into the 2025. So that stability in the exchange rate and the fact that the current macroeconomic condition of Nigeria now is giving opportunity for them to begin to export most of their goods that they produce. So that brought a lot of increased sales for them, and that drove their profit, particularly for Q1, and that's why they are there, for year to date. But if you look at it at the moment, now they are not there.
Not
They're
so great,
not there, but year to date they are doing well.
And talking about sectoral performance, when we're looking at the moves we've also seen so far. Now, yesterday we saw the NGX also record one of its highest, biggest daily gain so far this year. This is also driven by banking and insurance tickers. What's going on there?
Yeah, of course, you heard about the forbearance issue that, the CBN put on the bank. And they come up to say, oh, we can manage it and all that. And that, again, brought some kind of positive signals for investors in the banking stock. And again, coupled with what we now saw in GTCO, listening to the London Stock Exchange, and that's if you see what is happening in terms of volume of trade in GTCO trade, that has gone up because of that. So these activities, that confidence that they show that they can manage what the CBN has levied against them, brought that confidence to them. And then for the insurance sector, they are both in the financial space. So I think what is happening in the banking sector is what is trickling down to the insurance. And you see them also, doing well. But they are not so strong enough. If you look at the top 10 year to date, they are not there because these activities are just new. So they are not among the top 10 performance year to date in terms of for this week activity that has happened. That's looking from Monday to Thursday.
But when we still look at the top stocks by volume, we still have Japan Gold, Access, UBA. In terms of these moves now, what more should we expect going into the new week? Yeah,
of course, the market has trended upward this week. And we do not think that will continue because you know what happened. The market is a volatile space. Once this kind of things has happened, what you then see thereafter is people want to do profit taking. They want to take away their money. So we might see some form of withdrawal, coming down a bit. Then thereafter we'll see it again. But we'll see more of trending upward again next week because a lot of things are coming up. There's updates of Q1, Q2, all those are coming out. And GDP data, we are expecting that. Inflation data is coming out.
We're still waiting for that GDP report because it's long overdue. But yes, the inflation report is expected by next week, Tuesday. But before we get into what we should expect even going further, especially when we're looking at profit taking and then rebalancing of portfolio, I'd really like us to touch on the moves by GTCO. Now, the listing on the London Stock Exchange, and then also looking at the 2.28 billion public offers on the NGX just after the LSE's debut. And then when we also look at ETI to the capital raise plan here, how are investors viewing these moves?
Interesting. I think it's positive. The listing of the GTCO and the London Stock Exchange is an interesting move.
And how much of movement will this also add to the stocks?
Yeah, so of course that will happen. Some form of revaluation or re-rating of the stock of the company, and that will drive. And that's what we are seeing at the moment. At the moment, their stock price is going very high, and people expect to see that it will eventually turn out well, and that will give them some positive credit and play some impact on their share price. It will continue like that. Usually, if you check the trend, once a local company is being listed in a foreign company shares, you see that movement. It shows that some level of transparency in that company. It shows give investors confidence who want to partake in the company shares. So I don't think it's surprising. These are the things that we expect to see.
And I was having a conversation just before you also got on this. We were talking about with Chuka, talking about the likely June inflation print, what we should expect, and how this would define the next moves we should expect from the MPC as well, and its impact when we're looking at sector sensitivity at the equities market, your take around what we should expect, the print, and how this might also, the next MPC moves might rub up on the different sectors.
Yeah, so we've seen inflation coming down. So for me, again, inflation is also likely to come down. My forecast is around
So it's a good time for the equities market.
Yeah, so it's a good time for them, coupled with the fact that the fixed income stop rate at the last auction has come down for most of the short-term instruments.
Yes.
And coupled with the fact that we've seen some form of system liquidity, excess liquidity in the system that is also driving people. That's why you see that anytime there's auction, there's kind of excess subscription, and not everybody that subscribed for it usually is being allotted to. So those people that are not being allotted, they bring their money into the stock exchange. Coupled with the stop rate that is coming down now, people will begin to say, oh, this stop rate is going down.
Will you say the luster is fully back for the equities market?
It's a yes, basically, because a lot of signal is showing. When GDP data come, we are going to see it go up. Don't forget that we're expecting, if it is the rebased GDP that comes, we're going to see growth in the GDP. We're going to be seeing new sectors. We are going to be seeing the CBN is doing a lot to mop out excess liquidity from the system. We are seeing stop rates. CBN is likely to cut rate, and stop rate is going to go down. So all of these will bring some form of bubbles in the equities market. So it's going to be an interesting time for equity market now.
Okay.
Coupled with the macroeconomic stability that we are seeing now, inflation is coming down, exchange rate is also kind of stable, and interesting times.
Interesting times, definitely. Would have to leave the conversation here for now, Patrick. Thank you for your time. That was Patrick Ejumedia, Head of Research at Sterling Asset Management Limited.